What's up, everybody? Happy Monday to you. Sorry for the late video, but I've been battling a cold the past couple of days, so it kind of had me out of it. But let's go to the past week's trades. It was another volatile week, to say the least. But I did do 2 trades, and I went light on it due to the volatility and the uncertainty with this coronavirus. But first and foremost, again, these are not recommendations to buy, sell a stock option or contract. It's just simply information. I'm just sharing with you guys what I do in my own account. So let's get started. Early in the week, it was on February the 28th, Friday. I bought the 312 call option, meaning I was planning for the SPY to go up to 312. On Friday, it closed at 296, and then on Monday, it hit a high of 309. Now, even though it didn't hit 312, I was able to get out on March 3rd at 100% profit. You see here, here's the contract. I got in it at $154 and was able to sell out of it at $300 on Tuesday. So I was in it 2 days, 100% profit. That was the first trade that I did for last week. And I purchased that on the 28th of February and got out of the trade at 100% profit on the 3rd, March 3rd. The second trade that I did was on Wynn. Excuse me, Wynn Resorts. This trade I got in on the 2nd, which was Monday. I was planning for it to go up, so I bought the 110 call. 110. So on, what was that, the 2nd, March 2nd, which was Monday, I was planning for it to go up to 110. It closed at 107.94, so it didn't have to go up much in order for me to make money. But due to the volatility, this contract was very, very expensive relative to how much I normally would put into a trade. This contract I paid $260. And although Wynn did hit 110.77 as the high for that day, that contract did nothing. Did absolutely nothing. On the 2nd, 260, you see the close at 260. This is the contract, the 110 call. And the next day it went up 350. So it went up $90 before trading down that day, that same day. It closed at $65 and it just kept trending down until Friday. Remember, any contract that I get in, I have until Friday for the stock to make the move. And this stock went against me. So this was a complete loss. Those were the only 2 trades that I did for the week. Like I said, due to the uncertainty and the volatility of the market right now, it's just kind of scary right now. So I will take trades, but they'll be light and they have to have a high probability of success. But let's look at the numbers. Based on these 2 trades, the SPY and the Wynn, here you see I had this gain, and then I have this $260 loss. So that puts me net P&L, I'm down $700, $714 with a 36% win rate, and I'm on my 25th trade. I did 25 trades so far. As you can see, my equity curve took that big dip, then I brought it back up, hit, and now I'm $700 from break even. So We'll see if I'm able to get any trades this week. Right now, the overnight market is crazy. Let me show you what I'm talking about. Right now, the futures is down so much. I think I had the wrong contract. That they halted trading in the futures because it's down so much. Right now, the Dow futures is down over 1,200 points. So they instituted trade limits, or what they call limit down, which halts trading once it dips a certain level or goes down a certain level percentage wise. They'll halt trading. So it's going to be another crazy day in the markets. It's going to be another crazy week. So just get ready. And we'll see if I come up with some trades. If I do, I'll execute them and I'll share them with you. Let's take a look at some 401ks compared to the overall market. This fund here, this is the S&P 500. This is what most 401k funds track. As you can see here, it's an exact image. So this is the 2040, which is my retirement age. And as you can see, it's tracking exactly whatever the S&P 500 does. We're still well above what they have as a 200-day moving average. Most funds and most long-term investors look at a 200-day moving average to signal when you're in a bullish or bearish market. Right now, we're still well above the 200-day, but we're just below the 50-day average on the S&P 500 and on this particular fund. Let's look at another one. You can see the exact same image. These are weekly charts. Every bar is a week in trading. And remember, if it's green, there were more buyers than sellers, which caused it to go up. And if it was red, there were more sellers than buyers, which caused it to go down. So even though from this peak, it went down 15% from the peak. Like right now, it's at 12%. So we're in correction. And we're in what is called a correction. Anything 10% or above that is what they call correction territory. So the market has corrected itself. Now, whether it continues to go down, time will tell. So stay tuned. Thank you for listening, and look forward to the next video.